The spring market looked ready for a classic rush, but underneath that surface momentum, the reality on the ground is completely different. This infographic from the latest market report shows exactly why people are confused. Look at the GTA snapshot right here. Home sales actually jumped 7% compared to last year, but the average price fell by nearly 5%. Usually when demand goes up, prices follow. But buyers right now are stretching to their absolute affordability limits. They are making purchases, but they refuse to bid up the prices just to get the deal done. We are officially out of the fear of missing out era. Just a few years ago, buyers threw down blind offers because they were terrified of getting priced out forever. That psychology has vanished. What we have now is a strategy market. Active listings in Southern Ontario are piling up faster than buyer urgency, giving shoppers the luxury of choice and time for the first time in a decade. Reacting to generalized headlines without understanding these underlying dynamics is a recipe for error. Buyers who ignore the data will overpay, and sellers relying on yesterday's hype will watch their homes sit empty. The Bank of Canada held its overnight rate steady at 2.25% at the end of April. Even without another rate hike, that specific number acts as a psychological ceiling, keeping buyers cautious about their monthly carrying costs. You can see how this shifts the balance of power on this spectrum chart. We have moved away from the red bidding war zone and firmly into a blue negotiation market, driven by that rate ceiling and expanding inventory. In this environment, your leverage is measured by the terms you can dictate in the contract, not just the sticker price. Buyers are walking away unless they get their protective conditions. We are seeing a massive return of home inspection requirements, strict financing clauses, and buyers dictating flexible closing dates that work for their schedules. Buyer leverage looks like the restoration of your right to conduct basic due diligence, inspecting the property and securing financing before the deal becomes firm. Performance in Southern Ontario right now is entirely dictated by the specific type of property you are trying to buy or sell. This breakdown shows where friction is highest. Detached homes dropped 6.4% due to intense affordability resistance. Semi-detached and townhomes in the middle are holding up better as a realistic compromise. Meanwhile, condos took a 9.1% hit, currently the softest category. Condo inventory has been climbing steadily because buyers have dozens of nearly identical units to choose from in the exact same neighborhoods. They can pit sellers against each other to drive the price down. The data shows a clear trend. The further you move away from the traditional detached home, the more room you have to negotiate. That leverage also shifts dramatically the moment you cross city limits. A budget that gets you ignored in one postal code makes you the primary target in another. We can map this out on a chart, comparing an area's price premium against buyer leverage. In the high premium, low leverage upper left, we have Toronto, Peel, and York. Meanwhile, Durham, Hamilton-Burlington, and Waterloo sit in the bottom right, a lower premium zone offering significant leverage for buyers. These two areas attract significant investor interest because the entry prices are lower, and they have built-in structural demand from local tech sectors, universities, and steady outward migration. Your power as a buyer is determined by precisely where you draw your search radius. If you are trying to sell, you might see that 7% jump and wonder why your property hasn't had a single viewing in 3 weeks. Pinning your asking price to a neighborhood sale from 2022 is a risk. The list and wait strategy is dangerous, as time on market kills momentum. When you overprice a home today, it sits. It immediately loses visibility on search portals. Buyers assume something is wrong with it, and you are eventually forced into a severe price reduction. Sellers now require aggressive pricing accuracy from day one. Your presentation must be sharp, and your home needs to be positioned as the absolute best value in its specific category. Today's successful sellers trade their emotional attachment to peak market values for the strategic certainty of attracting a qualified buyer. This flowchart maps out strategies for the second half of the year based on your position. If you are buying, execute while inventory is high. Prioritize locking in protective clauses and financing conditions rather than perfectly timing a market bottom. If you are investing, focus on selectivity, avoid negative cash flow properties, and look for strong rental fundamentals in Hamilton and Waterloo. If you are selling, price against comparable properties sold in the last 30 days and adapt instantly to market feedback. Succeeding in late 2026 comes down to following the specific data for your exact situation and property type. Macroeconomic risks are still holding the broader market back. National GDP growth is projected at 1.2% this year, and slow population expansion is keeping a lid on explosive demand. Because of these constraints, the market is entering a prolonged stabilization period. We won't see a sharp surge in values, nor a sudden crash. Navigating Southern Ontario right now means trading broad market optimism for neighborhood-level accuracy. In a market defined by high choice and cautious execution, strategic precision will beat speed every single time.